Is the S&P 500 a good investment? This is something we hear from our clients all the time. My name is Dominic James Murray, CEO and founder here at Cameron James for nearly 10 years, so I'm here to share my feedback and experience. So we're breaking down today's video. 1, what is the S&P 500? 2, is it a good investment? And 3, how can you access the S&P 500? So number 1, the S&P 500 in simple terms is the 500 largest companies in America. Now, there's slightly more nuances to that. For example, Tesla is a very good example. Tesla was only added to the S&P 500 in 2020 because it didn't clarify or it didn't get over the hurdle of profitability because obviously it was loss-making for a long period of time. But in general definition, keep it simple, 500 largest companies in America. Now, what this provides for you as an investor is huge diversification, okay? You are owning, when you buy an ETF or whatever for S&P 500, you are owning a little piece of those 500 companies. Now, imagine 20 years ago, 30 years ago, impossible. Investing in those 500 companies would cost you a fortune. Nobody would do it because the stockbroker fees you pay would be astronomical. I mean, stockbrokers used to be for the rich back in the day. Poor people couldn't use stockbrokers. In this day and age, going onto a platform, they couldn't care less whether you got £10 or whether you got £1 million. You can go and invest in the S&P 500 like anyone else. In my personal opinion, there has never been an easier time to take control of your retirement and take control of your wealth and get good returns on your assets, irrespective of your network, irrespective of who you know. The platforms don't care who you know. They don't care what your profession is. They don't care what your background is. You can go and get a slice of the action in terms of the equity markets. Now, that gives you a sort of rough breakdown of what it is. The great thing about a diversification, though, is people say, oh, the S&P 500, I'm overexposed to America. But that's a bit weird and saying because it's 500 companies across totally different sectors. Yes, okay, we know. Telecommunications and technology are obviously right up there. That's where the big players are in the S&P 500. But you've got everything else, healthcare, mining, energy, all sorts of diversification just within inside that one S&P 500 fund. Now, here at Cameron James, we would never advise somebody to only purely invest in the S&P 500 because the S&P 500, well, the US stock market makes up circa 65% of the global economy. If you put 100% into the S&P 500, you might have very good long-term returns, but you're obviously over-diversifying yourself, or overexposing yourself, I should say, to the world's largest stock market. So that kind of gives you a breakdown of what the S&P 500 is. Now, is it a good investment? I will go out straight away here and say, I think the S&P 500 is a fantastic investment. I would almost go as far to say I think the S&P 500 is the best investment I have actually ever seen in my life. Now, obviously, I'm not factoring in, oh, if you'd bought Nvidia or if you'd bought Tesla or if you'd bought some individual stock that had gone up by 1,000 times or you bought Bitcoin when it was worth $20. Yeah, sure. How many of those people do you know in your life? Not many. How many people do you know who bought Nvidia when it was $10 a share? Not many. But I know hundreds of people, thousands of people who are invested in the S&P 500 and they have used it to fantastic effect to grow their wealth. Now, of course, I must clearly go on record and say, just because over the past 20, 40, 50, 100 years, global stock markets have performed extremely well and the S&P 500, since it's been in existence, has averaged around 10% return per annum, that does not guarantee returns. Doesn't mean to say the S&P 500 has continued to go up. And obviously the S&P 500 is extremely volatile. Now, one of the potential drawbacks of the S&P 500 is that it simply goes up and down. As we saw earlier in 2025, my team can add the videos here, we had the Trump stock market crash, if we want to refer to it, or Trump tariffs crash. The S&P 500 crashed despite the fact that all the companies were the same. Nothing had changed. Their profit margins, everything was the same. Their balance book was the same, apart from one orange man had decided to do some tariff stuff. The S&P 500 went down like a stone. If you'd watched though over that period of time at the beginning of April, it then went up like a rocket. I think it was 9.57% on the 9th of April or whatever it was after suffering -5 and -4.97 or something on the 2nd or 3rd of April 2025. So you are going to be buying into something which can be volatile, but generally speaking, the law of average, if you look at the S&P 500 over the course of time, it is largely gone in the straight direction upwards, but of course you are going to have volatility along the way. So for anybody who's interested in investing in the S&P 500, I would say that's kind of the final point of portfolio allocation. What's more important before that, say you have a defined benefit pension, say you have a defined contribution pension, you have an ISA, you have a JISA, you have a GIA, you have money in offshore bond. First of all, you need to work out what structure, what solution is most suitable for you. Are you better off in a SIP? Are you better off in your DB? Are you better off in your DC? Should it be an ISA? Should it be somewhere else? That's the financial planning part first, of working out what is most suitable for you for your retirement, and forms the large majority of your advice report and financial planning here at Cameron James. The portfolio allocation, not that I want to dumb it down and not make it important, but here at Cameron James, we're not reinventing the wheel. We're not trying to be Warren Buffett or say that we can outsmart the market. We hold the S&P 500 on a balanced portfolio at circa 60-65% weighting, because that is the global stock market percentage allocation to the US market. So in terms of allocating, that needs to come afterwards, before you've actually worked out where your money should be and what is the best structure for you. The structure might be for all sorts of reasons: tax advantages, your residency, whether you're UK resident, non-UK resident, etc. So yeah, investing in the S&P 500 is very simple, but you need to make sure you're in the correct structure in the first place. If anybody has any questions or you want to speak with us directly, you can head below to the comment section to book a day and a time which is suitable for you to find out more and about how we do our investments here at Cameron James. And remember, all conversations we do not charge for. The only time you become a paying client is after some weeks or potentially months worth of work, if it's a pension transfer, for you to sign on the dotted line of an advice report. Up until that point, all information, exchange of information is free of charge. And as always, take care of the UK pension assets.